Welcome to FYI, the 4-Year Innovation Podcast. This show offers an intellectual discussion on technologically enabled disruption, because investing in innovation starts with understanding it. To learn more, visit arc-invest.com.
ARC Invest is a registered investment advisor focused on investing in disruptive innovation. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. It does not constitute, either explicitly or implicitly, any provision of services or products by ARC. All statements made regarding companies or securities are strictly beliefs and points of view held by ARC or podcast guests, and are not endorsements or recommendations by ARC to buy, sell, or hold any security. Clients of ARC Investment Management may maintain positions in the securities discussed in this podcast.
From ARC Invest, this is FYI. I'm Brett Winton. We have a great show for you today. I have Charlie Roberts, our chief investment strategist for private equity, with us, and we have Michael Stewart. Today, we're going to talk about how AI is reshaping not just software, but the entire computing stack and everything that Microsoft M12, Microsoft's venture arm, is investing in, plus areas that it's interested in. Hi, Michael. How are you?
Hi, Brett. It's great to be here. Been looking forward to this.
Yes. Welcome. All right. So you sit in M12, is this right? And it's kind of like the venture capital kind of strategic investing arm of Microsoft. What is your area of focus and how does it interrelate to like Microsoft, the corporate behemoth, and its strategy? What do you do?
Yeah. And, the basic distinction is we invest with strategic aim and strategic intent, but we are not classically strategic investment in the manner of investing alongside business deals. And I'll talk a little bit about what the fund's objective is and how that separation is important. So we're given money by Microsoft, and we can't disclose too much of the details of the fund itself, other than we operate like a traditional venture fund, investing seed through Series B. We lead, co-lead deals, what have you, and write checks that could be in the range of $10 million for a first investment. The objective really for why we exist is to be part of the tip of the spear of Microsoft in Silicon Valley. So all of the investors at M12 sit in San Francisco, whereas, as you know, the headquarters and our operating team for the fund are all in Redmond to help the connectivity to the mothership, let's say. And really, the direction that they give us is very little other than to find interesting deals and signals of the future, things that are emerging out of the ecosystem that we're sitting in and we're immersed in. And the last thing we want to do is just duplicate the corporate strategy, which has its own ability to write checks of magnitude far beyond ours. But also, those are driven, as I said, explicitly by business deals, and they're better at making that determination than we are.
So when you're investing, there's not an eye towards like, hey, we're investing and also we're throwing in some Azure credits, or are those totally separate things?
I consider those table stakes things. There are some examples of where we have really targeted where Microsoft could use a partner that they don't have, that wasn't in the existing corporate strategy, and it just came together very, very quickly. That one would be like Armada, that makes modular data centers. Again, an idea that isn't new to Armada. It isn't like the breakthrough here isn't necessarily that Armada crafted this idea for the modular data center, but that we were aware of how strategies for growing cloud contracts with large enterprises were going, and the need for a partner to develop AI at the edge, which ARC has covered so well over the years. That's actually been this like giant gap in everyone's strategy, and Armada has fit beautifully into that and started announcing big partnerships with Microsoft. So that's kind of an example of where we went out and found a very high performing startup, awesome syndicate. We're in it with Felicis, Lux, Founders Fund, everyone, but also one that was complementary to a corporate strategy without duplicating it.
Give us your view of the overall landscape. Where are we in terms of kind of AI, and where in the value chain are you kind of seeking exposure? And our thesis is this is basically a platform shift that you really have the way in which you the user, will operate an interface with all of your digital life, but computation is fundamentally changing. Do you agree, disagree? Do you think, and where are you then allocating resources based on your perspective there?
Yeah, and we've luckily had a very nice front and center seat to how generative AI has emerged from the prior conversation, the prior awareness of AI, which followed its own, I don't know, I wasn't going to say hype curve, but it followed its own, like, while this is growing fast, and even though you could have said 2015, AI is not net new, and people were saying that, we were just suddenly discovering all these new capabilities. We were investing a lot, but the business side of it and then the use cases side of it were less clear. And I feel like, if I'm just looking back 4 years or 5 years to just around the ChatGPT moment, we were really on the cusp of another AI winter. We were on the cusp of losing the momentum, and there were researchers fearing this, like year after year, like, okay, the AI winter is back. And just in time, the profound difference in usefulness of generative AI both took people by surprise, because a lot of the existing AI researchers at the time were like, I know all about large scale GANs and generative AI. We know about it. We know this is coming sometime in the future. And then you had another group of people who had not been turned on by the prior wave of AI who are suddenly like, wow, this is really useful. Besides writing my term papers, I can generate images, and it snowballed from there. So we're in a period of like shocks that has always left both investors, developers, more or less like 99% of people wrong-footed every time like one of these waves comes through. And I think yesterday's model card results for Mythos is a perfect example of that. Like we should see this, or 2 days ago, whatever. It's like you should see this type of jump in model capability as more or less validation. We're going to somewhere profoundly different than the first thought of scenarios for AI, like aiding manufacturing and helping us plan our day and so on. It's going to be far more profound. And as investors, we have to temper that with like, well, we can invest in startups who need to start operating and collaborating now. Some of these scenarios of how AI reshapes society, we can envision as investors. And, you're a futurist. You're probably, again, bouncing all kinds of ideas around in your head. But startups need to start operating now, making profit now. They need to connect to the business that's like, maybe it's transitory. Maybe we're kind of in a process of changing the whole software business. But that's the two minds of the investor that we have to like grapple with. Partially, people aren't getting it enough, and maybe you feel that. I mean, that's kind of where I sit. But secondly, the need to make sure what we're investing in today can interface with the business world of today is just as great as ever, or we're going to lose all of our money as investors.
Well, I think one stat I like to cite, and it's currently valid, is like we're low 20% penetration of smartphone users with AI chatbot use, measured across all of the major model developers. And to find that penetration rate of internet to PC, you have to go back to 1996. In fact, early 96. And so, and to me, that actually feels like where we are in this particular cycle, where it's kind of people are seeing kind of the businesses emerge. But in 96, Yahoo was just being formed. Like, there were like Google was not even kind of like corporatized yet. We were just kind of beginning to unpack and understand all of the layers of the value chain that would emerge even through that first cycle. Leave aside everything that happened with smartphones and Uber and everything that happened afterwards. And so AI just touches much, much more. I want to circle back to I really remember ChatGPT coming out and me being like, this is mind blowing. And then talking to somebody, it's like, oh, that's been available via API for, they already had that. This is not anything new. And so it was a real distinction between kind of me, the more average user, saying, hey, this is like uniquely powerful, versus somebody who had access, but it hadn't been packaged in a way where people could experiment with it and find out all the ways it could be useful.
Yeah. And for those of us with a bit of gray hair, these look backs are very helpful for me, especially. And I hope when the history books are written, they point out that fact because we lived it, as M12, trying to drive investment in generative AI in 2021. GPT-3 GA was November 2021. So a full year before like Jasper AI started to grow revenue and before it really like became a topic for investors to focus on. There were at least 6 months of developers losing their mind. Like, these capabilities are dramatically different. This could go into big, big places. Where are all the investors? Where are all the VCs? And I remember hearing that in my mind. And we financed a company doing generative AI that was InWorld at that time. And the founder I was speaking with was so excited and surprised I knew what generative AI was. And it's humorous to look back at it at this point, but it's, as you said, it's like those different populations seeing ChatGPT as a major breakthrough in technology. Well, no, it's, the instruct model, it probably wasn't a giant breakthrough in the technology as much as it is opening the doors to a vastly larger group of users than were ever going to try out the API.
Reminded of I think speaking to some of the people that were involved in originally shipping Alexa, which was at least in part acquired, some of that technology was acquired from a British company, where similarly they had the technology under the hood for several years, and and investors and others only realized when they put like a human-facing skin on top of it, and suddenly people were like, wow, this is amazing, and suddenly it got all this investment, and then eventually led to being taken to a level at which Amazon were interested in. How do you think about it now, Michael, when you look at the space and where you think the value accrues in the sort of, foreseeable future? Maybe in the old days was 3 to 5 years, maybe now it's 6 months, if that. But as you look forward into investments you might make, do you think that there's a continuation of this sort of Pareto outcomes where really big gains accrue in a small handful of winners? Or do you think, there's multiple players come in with different smaller models, or just smaller players, like, I don't know, an 11 Labs, let's say, in audio? Or do you think, how do you see then open source filling in and maybe flattening margins, or just maybe expanding opportunity space? Maybe we're so early on the curve that the rising tide continues to lift all boats a long way into the future. How do you think about that whole landscape?
Yeah, and since open source is like a perfect thing to bring up now, because we're back to like, okay, a proprietary model, a 10 trillion parameter proprietary model has knocked all well, at least the people in the bubble, the people in the AI bubble, we're all like knocked on our butts, or we're knocked back by just the jump in capability. We could have gone back in time to remember, like, at the GPT-3 time frame, what would open source look like? And Stability AI had become visible to people. There was a local version of it, you guys remember as well. Even though it wasn't really doing the exact same thing as GPT-3, there was this thought of like the time to open source, or TOSS, time period for key proprietary technologies to open source technologies in IT. And we've seen, open source, time to open source in the model space is like sometimes days. Now, will that be the same thing we see in this wave of again, the next order of magnitude frontier models? It's hard to say, although if I go back to the use cases for the applications, where value accrues, like the providers of the agentic coding platforms, or the productivity software, or providing voice as a service to BPOs or other enterprises, they're the biggest users of open source models. They will use a mixture of different things if you speak to them. But if you really look at their patterns of usage, they shift as much as possible to the smaller, more efficient, lower overhead, lower cost models for obvious reasons. Because running frontier models routinely all the time without a model router, without any other technology to aid you, is a recipe for going broke quick. Plus, you'll be throttled. You'll be throttled before your credit card actually maxes out. You'll actually not even be able to get the capacity you want.
Right. I mean, it is clear, I think, our core, perspective on the cycle that we have, and actually carries through the 2030 forecast period, at least, is that the world is compute starved. And the rational response to that will be, if we were compute abundant, then it might be that everybody would just continue to ping the frontier model APIs. But because we're compute starved, you actually have to get, creative and efficient about routing to more efficient models when and where you can. And so it sets up for probably a software layer that lives on top that is running that arbitrage successfully, right? Where I do wonder, and I'm curious about your perspective of Cursor and Windsurf, both great kind of like coding wrappers on top of underlying models that would argue, hey, and we can route to whichever model is most efficient and provides the best performance, best bang for buck. And then meanwhile, certainly Claude Code and Codex seems to indicate that actually owning the underlying model gives you the ability to develop kind of like a software stack on top that's very, very, very performant and maybe even more performant than sitting aside. Do you think that is kind of like a one-off example and then that's going to erode back into a horizontal layer on top? Do you think that actually we're going to see a lot of kind of at least the default applications get built on these core frontier model companies and then like other software pieces will be more niche-like? How do you think that'll evolve?
The thin wrapper versus model blast radius versus whatever is the right move question's it's gonna be chasing us for years, because at the same time that you could argue in a rational world, you would skip the thin wrapper and use the model, and the model would just use the UX or UI that's good enough to satisfy people, and the profit would accrue to the model provider. The reality is, as these markets touch more and more users and become broader, the strain on the go-to-market and marketing and supporting those customers by a company that's also developing frontier models gets tougher and tougher. And again, just to make sure we stay in boundaries and I don't talk about any particular company, I'd say like every company, large and small, that wants to develop frontier model capability is in a battle for hearts and minds for the model that would empower, whether there's a thin wrapper or directly customers of the application. And that would lead you to think that like, okay, the thin wrapper business is pretty bad. Everybody's going to be battling for the customer's dollar at the end of the day. And that's every business, right? I think you have like this moment where we're looking at growth in the coding space, and some of the most efficient use cases are, not to get too off topic here, but like the open Claude is like interfacing with a platform like Claude Code through a CLI. And it turns out to be like the most efficient way to run 5 of these sessions at once. These are little hints at like, we actually are probably going to break out of all of those UIs completely and get to like a higher level of interface with the experience. So you might want to you could over-index on this question of thin wrapper versus model if you were really trying to think of a couple of years out, like 5 years out.
Yeah. I mean, basically what you're indicating is hey, there is kind of an emergent new operating system here somewhere out there. And it should, like, necessarily these transitions, the thing that comes out the back end that wins looks totally different from what you had before, or at least that's my view, given how disruptive this kind of like change in trajectory is, that there's, some other way that we're going to interface with these things. And I think kind of our, call it house view, but I think it's valid, is, the world as a whole is massively, heavily under softwared. And so the actual expansion of total amount of spend on, call it tokens or whatever, total amount of spend on AI software is going to be so large that you could even, yes, there could be like small software companies that sit on top of very large kind of foundation model providers, or you could say, hey, it's more of like an even mix. But even in the small category, some of those would be tremendously valuable, huge businesses, given the expansion of the overall TAM.
I think the amount that we spend on tokens as a world GDP, right? This is the lowest. It's lowest it will be. Tomorrow it will be higher. The day after it will be higher. There will never be another day in our lifetimes where we are using less AI.
Yeah.
Forever. Or for as long as we're alive. I don't know. If you think about like okay, there's like facets of that, back to the investing mindset, there's facets of that, like more efficient models, more efficient data centers, more efficient, that could maybe make it like an ISO spend. Maybe there's some situation where there's limits to how much we can actually put into the software and services part of our spending, and I could see that. But also, the use of AI is a ratchet that we can never turn back. I could say that definitively.
How do you think about the recent, I guess they're calling it SaaSpocalypse, or I think I heard someone say disaster. And do you think that was overblown, or was that appropriate? Was it too late? Was it, how do you think about that? And have you looked at investments which take advantage of that potential move towards that new world, including, as Brett was saying, like maybe to double click on that, AI that builds an OS on the fly for what's needed when it's needed?
Yeah, indeed I have. Well, first, like there's two levels of the SaaS, because Meritech had this awesome blog a couple of years ago called The SaaS Crash that I would go back to all the time and read. It was such excellent coverage of investors sensing there's something like changing fast. And a lot of the companies in this, again, public index, without mentioning any of them specifically, they were maybe sitting at valuations that were hard to support. And so there was that investor reaction. And then there is the more recent venture capitalist plus public reaction of AI is just outgrowing and eating SaaS revenue. And for that piece, I mean, I think what we're going to see is it's going to be incumbent on every CEO of a large company, again, talking about like enterprise software sales. The basis for enterprise software sales is a large company's operating an IT budget that has like a certain percent of the revenue, right? And if you're going to be spending more on AI, you're going to be spending less on some of these other services because they don't want to damage their profits. Okay, so there's like probably a ceiling of how much total spend a company wants to have in and all their software and services, and AI is going to be growing into that. So one response is, okay, all the SaaS products add AI. So you have SaaS plus AI solved, right? Well, not really, because what every company wants in terms of the AI that they're using is going to be different. There's also this issue of like using my own private proprietary data, which I'm not super excited about just merging with the cloud and merging with AI. And that's, this is the data gravity phenomenon. That's always going to be, kind of the counterpoint to the cloud-based AI taking all of the AI services. So where I'm proposing there could be another way for a large organization that wants to be a frontier firm, meaning every employee has access to AI. Probably at ARC, all of you guys use AI. You're all smart, professional, clued in people. And if you have a cloud native software company in San Francisco or another techie company, probably all of your employees can get AI, and it's not going to be like a major burden on the company. Let's say you have a large organization with 100,000 people or 1 million employees or something like that. And I'm thinking like how to name them, but they could be doing things like delivering the mail to people, or they could be doing things like providing services to utility customers, or they could be doing things like an educational system, like a university or a government. The leaders of those organizations still want all of their employees to have AI. AI is a necessary piece. Again, a future-facing CEO or leader wants all of those employees to have access to AI. And how are you going to do it? If I just ask you on the spot, you're the CEO of this big organization, you need to have a frontier firm right now. Your move is probably going to be, well, I buy a subscription to Copilot, ChatGPT, Claude, whatever like that. There are tiers of these that apply to education. There are tiers of these that apply to government, and so on. That's what I would consider to be the safest and most likely trajectory of every provider for AI. But the other way to do it is something I'm working on the terminology for this, which is wholesale AI or wholesale tokens, where you are more or less an administrator of all those, put yourself in the shoes of the administrator of all those employees. You are not only providing the IT and services for all those employees, but also controlling access to the data, securing it. And you're able to negotiate with the cloud providers this thing called at Azure, they call it a PTU, a provisioned throughput unit. It's basically like buying bandwidth or buying tokens in bulk. And it's a way that's very preferred amongst some customers because, again, it allows them to just more or less forecast their token usage and get this good tier of pricing. And you can read all about this at the various cloud websites. PTUs offer a way to send tokens across the firewall of these large organizations. The organizations can then provide access to all of the models, build their own custom applications, keep data private, and more or less operate a private SaaS service within their own organization at a much, much lower price, maybe 1/10 or 1/20th of what it costs to have the seat per seat cost. Let's say it's, again, 100,000 employees and you have $30 a month. That's call it $350 a year. And for 100,000 employees, that's $35 million a year. If I'm buying PTUs, I am able to more or less control how much the various users in my organization use AI. I might even spend and buy more tokens that way. But I'm able to satisfy the unequal use of AI across these different employees. Like some of the people might be using ChatGPT to answer a question here and there.
I think the challenge with it, and I was thinking about this from a business model perspective, why is the seat-based model important for the AI companies? And not just the seat-based model, but also restricting a user per seat. Anthropic was cutting off, people had 4 different pro accounts because they were trying to maximize up to the cap of the seat, right? And I think because this is software that is shipped and the people who are shipping it don't know what it's capable of, you have to enable the endpoint users to figure out what it's capable of. So you have to enable kind of this experimentation layer. And that could happen through the token utilization model at the enterprise level, like you're talking about. But also, I suspect the approach of the CIO would, if they're kind of wrapping it in that way, would be well, we need to underwrite specific use cases for this thing and figure out oh, these people get this much because this is how much we can get an ROI on. But I think we're still in the stage of you have to give employees effectively unfettered access. You pay seat-based pricing where the average price is designed to some average utilization across all of the seat-based users. And then as people discover kind of what it can be used for, then their utilization goes up and then they get shifted into this utilization model.
Long run, that will happen and it will kind of readjust. It probably will go back to that type of model. But right now, the phenomenon, and again, you guys may have folks like this in your organization, or you may know of startups that are operating like this. The distribution of people who are running 5 simultaneous agentic code subscriptions all at throttle, and they're maybe managing it 24/7 through a Claude-like arrangement, and then the folks who are just occasionally asking a zany question to ChatGPT instead of sending it to Google. That thing, until that's fixed, it would be like saying, you and I probably have a cable internet subscription or Fios or whatever. We are okay with paying, a certain dollars per month for all the bandwidth and we don't maybe use it all. A corporation doesn't do that, right? They don't say I'm paying such and such per employee. They just buy the bandwidth for the whole company. And AI as again, as a phenomenon, we're talking about token factories and shipping tokens and so on. It's more efficient to do it this other way, unless there's something in the SaaS experience. The application itself is so good. It's so much better and so much more valuable and better to use. That's the decision point, not necessarily the cost efficiency, the economic efficiency piece.
Can I ask how many subscriptions do you personally have or use? Roughly, I'm just always interested because I'm just thinking as you're saying it, how many I have. I probably have, I don't know, 20 or 30 if I factor in apps, of which probably 3 are AI, and of which I have duplicate versions in my work accounts, right? So I have a bit more, probably have 6 AI ones. And then casting my mind forward, I'm like, how many do I think I will have subscription seats running? I hope at some point I basically just have 1 or 2 or 3 or something, and then my agents are doing all of the rest. Would I move to a position where I'm happy paying much more? I mean, I think we've still got this individually, this sort of cognitive block against paying, like, would I pay any single app $1,000 or $2,000 a month? Maybe that's the right thing to do if an agent's then sorting everything else out for me. But how do you think about that move?
That is the key question, Charlie, because again, the $30 a month is kind of like, it's a number. And again, I can't break it down too much without talking about products, but like the $30 a month is just a number that is palatable, and it's similar to other subscriptions you might have. And let's say, again, if we go back to statistics about Copilot or Claude Code or other agentic coding applications where code completion or other types of complementary work with an agent comprise a majority or more of a programmer's total output, the analogy would be like, okay, if that's true, if that software makes that possible, shouldn't it be worth some large fraction of a programmer's burdened cost to an organization? Let's call it like $250K, which would be insanely cheap here in Silicon Valley. Again, is there a world where we're doing $10,000 a month AI subscription? Rationally, yes, there clearly is. And the question would be, why aren't we paying that right now? Why is the surplus so enormously large back to the consumer? And how many people are even aware of that? I think that's another crazy question that is not asked frequently enough, is how much productivity you get out of this AI thing without even accounting for it. It's simply gigantic.
Yeah. I mean, the way we model it, and I suspect we're going to fall afoul here at some point, but is that looking at historical business willingness to pay for software, they'll basically pay 10% of the productive value of the software to the actual software vendor. So they capture a huge surplus. I think because, and this gets to where kind of like wrapping into an application layer becomes more valuable potentially. If you're not selling to the CIO, but instead you're selling to the person who is responsible for the marginal hire, like, I don't know, somebody who has like a marketing organization or something, and you can sell in a near or like an employee output replacement, then that marginal hire will be like, oh yeah, sure, I'll hire this thing for, 70% of the fully burdened cost of the labor I would otherwise have to hire to fulfill the task. And I can just plug it in and kind of like glom it onto the organization. And it's like, yeah, the CIO will be pissed because I'm kind of going outside their thing. But it's like, I'm responsible for my business line and, my unit, like this is clear ROI for me, independent of some overall corporate strategy. And because it's like it's like an easier fire also, I can always like back out of the stance and go to another vendor if I see another option out there. But it means that you could end up like with packaged service as a software is kind of probably term of art that captures much more of the productive value.
You're talking like an actual economist. I'm just surprised. No, it's funny because price discrimination in AI tokens has been a phenomenon. I was just wondering like when we will start to see this at the beginning, in 2022 as this was growing. And we are starting to see it today with this talk of low latency, high throughput, high demand sessions for coding that's enabled by new hardware. And you guys might know I'm very, very focused on hardware as well. But probably the thing that you're describing, like I more or less have a stable arrangement. I need like surge demands, high urgency, high priority access to the 10 trillion or whatever it will be at that point in time. Like I need just like emergency high grade AI. That will be very interesting to see how that develops as a cost equation. It could be in a completely different universe than what we're seeing today and be totally rational for the exact reason, as you said, emergency repair work done on code or advice or information or something like that. that would reflect services in the real world of that type.
Yeah, that's like the ops layer where it's like my service is down. I'm losing this much in revenue for as long as it's down. And, I don't have the staffing to adding an additional AI unit to this, gets it up that much quicker. You might just do the economic trade-off one for one.
Right into the Jira ticket there. I need the ASI now, right? To jump in.
One thing I just want to make sure we get in before we do eventually wrap up is definitely, how do you think, what are you most excited about in terms of investment themes at the moment? Where should be, if people are bringing you deals, what should they be bringing, and how do they reach you even? And as you think about leading, is there anything that differentiates the deals you look at that are leads to you versus ones where you like to sort of follow on and learn into the build?
Yeah, I think for things I'm really excited about, there's a whole piece about the data center of the future, which maybe I'll talk about in a second. But from the software and application side of things, I still am surprised. There's investments I've made, but I just want to talk about why I made a couple of these and what I'm still expecting to see. Things I'm surprised that haven't caught on as much yet really relate to consumer AI. And it's not because there's no usefulness. As we just said, there's this economic value that's more or less handed directly to consumers or left on the table or whatever you want to say, that maybe isn't that valuable to everybody. Like writing code at super expert level isn't actually that valuable to everybody. Okay, I can get that. So I've been thinking for a long time about just entertaining, delightful, amusing experiences that some people think, we don't get enough of in today's entertainment world or the traditional world of media that we see today. And is AI an answer to that? Well, clearly there's been a polarizing side of it, but then we're seeing more growth in casual AI experiences and gaming. And for me, one of the areas where I think there could be a lot of growth is bringing AI not necessarily to your phone or PC, but to a smart TV. Smart TVs are growing fast in people's living rooms and in every setting. And they increasingly have more compute capacity in the TV to do edge to cloud orchestration. And I just see them as a natural and easy window to deliver AI to people who need it just occasionally and might like to see something enjoyable. That's a bit different from the AI slop fears of just terrible high volume media. I just want to be silenced or go away, kind of like elevator music or something like that. I just want less of that. But there's something to be developed there. And that's, for example, a company I led a deal in a year or two ago called Weekend, delivers that type of interactive voice experience through your smart TV. I think that could grow fast.
Making smart TVs actually smart. Is that the tagline?
Smarter, right? And interactive. There's the wholesale, the wholesale AI or the wholesale private SaaS opportunity I talked about before. And then, I think science for AI, I'm a scientist. I'm very excited about what that could mean too, but I've wanted to pace myself. I think this year I'm definitely going to lead a deal in this material science for AI. I'm a material scientist, so I've heard many things about it. I've seen some companies funded. I'm going to spend some serious time looking at that in light of my career and seeing, what could I really see that's different and useful here. And of course, we're always looking for where Microsoft could be a partner and a company's growth that could make an impact there. To give a hint, I think it's going to come down to specific verticals in material science that are connected to the data center of the future, which is really, in my mind, the biggest open that there is. Of the biggest open of all is really how inefficient our today's technology is from all the walls of the data center inward.
Wait, before we get to data center of the future, just unpacking the science layer one level, do you think it's important that do you think the scientific breakthrough will require attaching, call it AI systems to essentially automated data automated lab or automated furnaces, or do you think that you can kind of go after it in a way where kind of the data comes from elsewhere, or you don't have that lab in the loop type system?
Yeah, I've looked at those companies too, and I like very much this idea because there are companies doing different levels of it. Some handle just the robotic automation itself. Some are more full stack, some are oriented toward discovery. But I would actually very, very simplify this to, if you delivered a solid lead, and let's not delude ourselves here, like one of the really big problems with AI for science, like drug discovery or other things, is just too many leads that take too much work to actually get to something valuable. Material science is a very spiky, it's like results that are impactful in material science come from out of nowhere. And many of the radically capable materials that we rely on today for aerospace, for energy, for compute and other things were discovered kind of out of the blue and took years to even rationalize, like, what does this discovery mean? But those are the pieces that could be sped up by AI. I'm talking about deliver me one lead that is really different and actionable in one of these areas of material science, and I will be 100% convinced. I don't think there's that much differentiation in being able to empower humanoid or whatever form factor robots with the dexterity and the animation of a scientist working in the lab. I'm bearish on that thesis, frankly, but I think it will be used a lot. So don't take that as like, I don't think it will happen, but one company being able to do it over others, I doubt it, because today's science doesn't work like that. You don't have a supremely dexterous or other capable scientist that's making the discoveries. It's the person that's able to see this odd thing and assign context to it that no other person can.
Is there a certain, within material science, like a lot of it comes down to rapid, inexpensive, reproducible, and accurate evals, right? Like that's why progress is so good in say coding, because you can write a unit test. Like what's the equivalent in atom space of a unit test? And do you think, is there one experiment that is the place to begin, or that could be really impactful? Or is it like hundreds of different types of experiments for that automated robot lab of the future? Like what would you be interested in looking at as an investment thesis, for instance?
In the material science space, high throughput screening, and again, you guys have been around. You may even remember the combinatorial materials discovery companies of the early 2000s during nanotech. If I look today at like what would be really useful to make use of a lot of leads and advance them to like a supremely valuable candidate for a disruptive innovation, it requires control of a precise test bed. And that test bed in semiconductors, memory, whatever, are owned by the foundries and sometimes the equipment manufacturers. In other places, it's like a turbine blade, or it's a leading edge wing surface. You have to have control over that to know, where you can actuate the knobs on. To do it purely in latent space, where every aspect of it is virtual, every aspect of it is synthetic, and then the lead's viability is evaluated with regard to that. So far, I've just never seen evidence that it's produced that great of a lead, but I'm willing to look at this more deeply. When I look at the approaches of a lot of the companies that have grown fast here, it's like we're starting with a modular material that has in itself a high degree of variability and amenability to lead synthesis or lead like vast growth of the combinatorial space and leads. And that's great. But if I could pick on an application like direct air capture. Direct air capture is just a valuable application for a number of different reasons, but actually collecting data with different materials in DAC over time is very, very expensive. And the results needed to show a breakthrough are subtle. I mean, it's like a very slight difference, and that would involve many factors like the costs and energy inputs besides just the Brunauer Emmett-Teller sorption data of a material or something like that. So scientists can nerd out and geek out on like, we found a material that like is way off the charts in one of these analyses. But I'm talking about like, we could use AI to help us assess like strange results and spend time thinking about how that might apply to a system that we have control over, i.e. the test bed. And that would be to me like the answer to like, do we need humanoid robotics like doing all this work? Yes, we could make use of it, but without the stable test bed, that work could be for nothing.
Yeah.
let's go data center of the future then. I mean, I'm sure we could go deeper on the science route. I do think that there's one of the gaps. I think one of the reasons we're excited about generally like real world AI is because I think the data that comes off of being in the real world is just intensely weirder than anything you can simulate. And like it's some of the fundamental gaps, I think, in the AI models, and particularly like multimodal and image understanding, actually comes from like a core lack of like actual real world data, and kind of imagery is like so much like a byproduct of what you see operating in the world. And I just think that's like an interesting kind of like data generation direction that will inevitably end up going. What is the data center of the future? What is it going to look like? Yeah, and why is it not in space? Let's put it that way. Yes.
Let's get to the space piece last. But just for my career, I started my technical career in industry when Moore's law was supposedly ending due to lithography hitting a brick wall. This was the early 2000s. It led to a flowering of different ideas like beyond CMOS, and quantum computing also blossomed very rapidly at that period of time, because it was another branch of like, okay, if CMOS has ended, what else could we do with compute? And we kind of got through it with lithography. We just smashed through that brick wall and forgot about it for many, many years until fairly recently. And there's now not just one brick wall, but we're kind of like we're in a brick box in some ways. Some of these constraints are harder than brick. They're more like, diamond hard, such as the ability to not just generate more electricity, but deliver it to sites where we can build AI clusters of gigantic size is something that can't be changed fast with any amount of investment. I also did some time in solar energy and stuff like that, so I know about, like, again, there's many ways to produce power quickly. That's irrelevant if it's so expensive to distribute power. And until we solve that, I'm focused more on the data center itself. So the data center that we build today, that Microsoft or any other company builds, is evolved from a IBM PC of the 1980s. It's still has some of the same features, form factors, voltages. It's great, it's descended from, but still strongly resembles the modularity of the PC era, which blew up quickly. It created the chip industry we have today. And I want to drive a stake into the heart of that industry, because AI changes more than the need for more compute. It doesn't just like create a new tier of demand, which you could say is it dwarfs what we have experienced through the PC era, the mobile era, the IoT era, everything. And strangely, we're reacting to this in a way that's like kind of like the SaaS plus AI bolt-on. We're doing that more or less with the systems we're building. I think too, like the industry has been through, and I was in the semiconductor and equipment industry for about 20 years. It's been through some ups and downs where you can get excited about a new inflection driving massive change. There's large investments that are made, and then kind of the rug is pulled, or Lucy lifts up the football at the last moment before the kick. And these companies are punished severely for their overinvestment, right? Because it's not just like capacity is stranded, but you lose track of where the market is actually going. So we set ourselves up with an industry that is still evolving chips to somewhat smaller and smaller features. That's Moore's law. And we have a separate world of fabrication for logic and memory. That is also a consequence of standard products versus logic designs and so on. And yet at the end of the day, we want to scale that paradigm. Again, goes back to the IBM PC of just like CPU plus DRAM. We want to scale that to an industry we're going to spend trillions of dollars on. And I think just as a scientist, I look at that as like, this is a missed opportunity to just zoom out and say, these are just token factories, right? Remove everything that exists about the foundry technology that we use. What are real constraints within, that industry besides the power and so forth for the data center? And you come back to like, there's not enough fabs. There's not enough lithography machines, there's not enough materials going into the advanced packaging to make the machines that could satisfy all the demand that we see. And so from an investment point of view, I want to tackle these things one by one with some interesting catalytic investments, but I start with the chip area itself. The lithography reticle size that we've been working with for the EUV tool is descended from the CPU and application processor area, which involved all these assumptions that were made long before ChatGPT, long before we're at this gigawatt scale data centers era. And that needs to be addressed. If you could say there's one factor that limits everything, it's the size of the chip. The size of the chip forces you, because we need to make a much larger chip, we're needing much larger scale systems, and the way we build them is through clusters that are connected through, wires and interconnects. And the industry's on a path right now to go from copper wired clusters to optically interconnected clusters, which is itself a big paradigm shift. But back to the chip area size, just the print size, the reticle size, that's the main cause of us needing to use more and more of these die-to-die interconnects of various sizes and types. And they're all worse than the energy efficiency of just shuttling information around in a chip. They're not just worse by a few percent, they're more like 10 to 50 times worse from an energy efficiency point of view. And so it could just ripple on from there. You can now think of AI as the primary driving force economically for the semiconductor industry. And yet economically, the prices of tools and the formats of fabs and everything relates back to the PC era. So there'll be a series of steps of like people smacking themselves in the head of like, there's no reason for us.
What catalyzes, I imagine I agree with your thesis, which I do. It's like you're going to have this huge explosion in the amount that we are demanding of output from this set of industry. And therefore, you need to re-engineer the industry to accommodate it. But meanwhile, Taiwan Semi is saying, well, we're underwriting demand from our customers at some discount 2 years out. And therefore, we're going to invest this much incremental in kind of like, capacity. Outside of Elon Musk saying, well, fine, I'll do it all myself. Like, what is the mechanism by which, and maybe that's enough, like him threatening the industry to be like, I'm going to like provide it will cause other people to capitalize other businesses that actually go at it kind of in a more aggressive and full stack way. Is there another catalyst we need to enable kind of this transformation other than your investments?
Yeah, our investments are just little tickles on the back of the neck compared to that. But I'd say, again, as usual, Elon is thinking way ahead, but he's also in possession of the full stack business model that would make sense to move so strongly in that area. And I think it would be surprising to me if he was the only party that would come to this realization. In short, an AI-purposed foundry industry looks different from TSMC's foundry industry, which is, as you know, making MCUs on the same wafers that they're making FPGAs as they are making AI chips. There's a vast BOM cost difference in those various products, but that is the foundry model. That is exactly the business that TSMC excels at. And the idea of an AI purposed foundry or even industry upsets and resets all of the cost assumptions that would go into making those products, which could then reorganize the capital to serve that capacity, not only to finally get much, much more powerful, efficient chips, but also to realign the industry suppliers so that they really are marching in the same direction as AI. Today, we're still in the phase of like, how do we take the last couple of years advanced package, GPU products and just make them bigger, make more of them, do them at wafer scale, do higher HBM stacks. You have to zoom out and say, wait, this is a bit crazy. There's specific numbers you can even attach to like how much energy we're wasting by extending this paradigm. But it's not a series of steps of evolutions from copper interconnect to optical to whatever, there's like even more fancy interconnects you could have. You need to start thinking about the whole thing as just a token factory and remove the need for ISAs and consistency with the last couple of decades of compute. Only then will we be at the point where we can really think about what the data center of the future looks like. But for now, I'm wanting to go in and prune some of the little weeds there that are like clogging the machinery. And for me, lithography is the central one. And I'm very admiring of ASML and the tool that they make. But I would say we have to be able to answer these questions of like how to process features at a much, much larger area with high precision, and do it with the aid of AI. Do it with the aid of AI as an ingredient in it. And that's where I'm thinking it begins. The other areas we have new investments in, like optical compute and optical interconnects, those are all parts of the journey toward a far more capable, far more AI appropriate and capable data center. But we have to realize like we're on this trajectory that I call like the whale oil era of AI. We're just still kind of like going out and harpooning the whales because that's more or less like the path that we understand. We have to more or less think of what abstract and different disruptive technologies get us to a better token factory, and by orders of magnitude, not a few percent.
I think it'll be like my assessment of the current state of capital markets, even looking at how people underwrite NVIDIA, and also the way in which like the media is proud to pronounce we are in an AI bubble, as in like this is established fact, and kind of like with the implication that a couple of years from now, look out below, like this is the end of it. And I think that is totally backwards and wrong. But I think that kind of like capital allocators are, maybe appropriately because of the size of the money involved, that's effectively the way they are hedging themselves. It's like, well, sure, 2 years of growth is what we have here, and then that'll be the end of it. And so kind of like the challenge is the believing in the vision you're laying out. It's like the amount that we will need to invest into the underlying compute stack just almost demands that we're going to re-engineer how it works, because or else, like you say, there's huge inefficiencies. Also requires somebody making pretty big bets that actually are contra consensus that we will continue. And with the exception of Elon, who is clearly making very big bets on this trajectory, we basically need more Elon Musks out there. Somebody to come step to the plate and compete with him so that he doesn't end up with also a decade lead. And by the way, for our book, that would be great, but a decade lead in kind of like fabrication as he's gotten a decade lead in kind of reusable rockets.
To the question you asked, like, who are the parties that do it? It's hard to say, but I believe it will need to be larger consortia of interested parties across a much broader cross-section of AI than just like a customer and a supplier. It will need to be broader than that. But as you said, there's an inevitability to it. This is kind of like trying to use the technology of building bicycles to make aircraft, like the Wright brothers and stuff like that. Yes, in some ways, like clever people figured it out, but you'd have to talk to them and say, like, eventually there'll be giant factories where there's like 25 people putting together like a strut inside a wing, for a massive 400 person jet aircraft liner. It would have just been like the War of the Worlds level of insanity to hear that at the time. And yet that's where we're going.
Well, I look forward to that future, and I look forward to Michael, you helping to enable it. Thanks so much for joining the pod. Enjoyed the conversation. Thank you, Charlie. And we'll talk to you next week. Thanks, Michael.
ARC believes that the information presented is accurate and was obtained from sources that ARC believes to be reliable. However, ARC does not guarantee the accuracy or completeness of any information, and such information may be subject to change without notice from ARC. Historical results are not indications of future results. Certain of the statements contained in this podcast may be statements of future expectations and other forward-looking statements that are based on ARC's current views and assumptions, and involve known and unknown risks and uncertainties that could cause actual results, performance, or events to differ materially from those expressed or implied in such statements.